Thanks for staying with us, everyone. An IMF team is expected in town in the first week of next month for that crucial fourth review assessment. Here's George Affe with more.
This fourth program review by the IMF has been described as the make or break for the country because of its impact for the broader economy. That is, if Ghana doesn't pass this assessment. This is because the review is based on how the economy performed for last year. However, based on revelations by Finance Minister Dr. Atuforsen that Ghana failed to meet all the critical targets, including the deficit, the country could miss out on this fourth review unless it secures some waiver from the IMF. However, following fresh revelations on the fund that it has pushed the Director General to audit the fiscal numbers, maybe things might change for Ghana going forward. The team should be in town from the 5th of April to 12th of April 2025 for the assessment and to be led by Mission Chief Stefan Rode. Ghana will have access to more than $300 million, possibly in July this year. That is if it passes this fourth program review.
Now, the Bank of Ghana Governor, Dr. Johnson Esiama, has urged members of the Monetary Policy Committee to join his push for transparency so that the public can appreciate outcomes of their work decisions and secure their trust. The Governor, Dr. Johnson Esiama, said this when he formally opened his first Monetary Policy Committee meeting as at the Bank of Ghana as chairman.
Colleagues, as we begin today's deliberations, let me reflect briefly on two institutional areas which I believe we can further strengthen going forward. And that's to do with the transparency of our decision-making process and also the communication of our forward-looking guidance as a committee. Colleagues, there's a growing sense in public commentary, and I'm sure the media here will confirm that the MPC decisions that we take, that these are taken behind closed doors without clear data-driven reasoning. This is the impression out there. And so therefore, to counter this as chairman, colleagues, I'm proposing that we implement mechanisms to make the committee's decision factors more accessible. We need to explain the issues better to the public, whether this means publishing the voting outcomes of members or enhancing the narrative content of our policy statements. Similarly, colleagues, we need to work on simplifying the way we present our forecasts so that the public and market participants can better understand the underlying policy story. These changes, colleagues, in my view, will strengthen our credibility and will deepen trust in the policy framework.
All right, joining me on Zoom, Senior Manager, Strategy and Operations at KPMG, Osei Osu Jr. Good afternoon to you. Thanks for joining us. First question, how crucial is monetary policy to government's medium-term macroeconomic targets?
Good afternoon, Daryl, and good afternoon to your listeners. Monetary policy, like we know, has a primary objective of ensuring price stability. And it's crucial because that is how government ensures that the opportunities it has on the fiscal end are coordinated properly on the monetary end to be able to, first of all, stabilize the economy and then also stabilize investor confidence, both from a borrowing and an investment perspective. So it's important for the two to speak to each other at any point in time. So government fiscal policy should be able to speak to what is happening on the monetary policies, just so we ensure that things do not become counterproductive. So what we do on the fiscal end in terms of our expenditure, our borrowing, our revenue projections should be aligned to our inflation and our exchange rate targets and expectations to ensure that we are not misaligned and working against each other as a country. So it's important for us to ensure that these two bodies work together.
Yeah, I know KPMG has done its own assessment of the 2025 budget presented by the finance minister. I mean, one of the things you looked at was government's macro fiscal targets. And so I just want to ask you how realistic you think government's projections are for this year. For instance, government is looking at a 4% growth rate for 2025.
So government, like we've all said, and I think a couple of experts have also mentioned that government has taken a conservative view to its projections in the medium term. And it's for obvious reasons to say that government is limited in terms of what they can do, especially because we are under an IMF program. And then the loss of investor confidence on the international capital markets also restrains government from doing a lot of things. What government is focused on now is to ensure that we see some macroeconomic stability locally, whilst we engage in some activity that restores investor confidence, both on the local, the domestic, and then the international market. So we see that even though government is proposing some key initiatives, it's still projecting that its growth will be lower than usual. So when you look at the real sector, for example, the services sector and then the industry sector will be growing at levels that are lower than what we had in 2024. But then the agri sector will be more than doubling in terms of growth. And this will be related to food inflation, and then also looking at what government is putting together in the Agri for Economic Transformation program. And that is expected to boost performance in the economy. So if government is able to live to its fiscal promises to the people of Ghana, and able to implement some of these key initiatives, we may actually see growth that is higher than what government is projecting now.
Yeah, you talk about food inflation, so I want to bring up the subject of inflation. When it comes to issues of price stability, you say government's target of 11.9% can be attained, but requires strong coordination between the monetary and fiscal side. So talk to us about what government needs to do going forward.
Okay. So on the inflation end, and like we mentioned, it's more or less a function of what's happening in the market. So we recently see treasury rates dropping. And like I mentioned earlier, that coordination needs to be there, because if treasury rates are dropping and the rates do not become attractive, what it then means is people may not want to put their money in treasury bills. If the public and then the corporate institutions are not putting money in treasury bills, they're either doing one of two things. They're either spending or looking for external investment. Same as the banks. If they are not giving money to the government on a treasury bill perspective, what it then means is they are either going to give it to businesses. And when we look at how the non-performing loan ratio is going up, that side is also not attractive to banks at this point. So if we are not careful, what it then means is our banks will also start looking at external investment, which would impact our exchange rates. And then if, like we know, if we have so much money in the economy, people have a lot of disposable income, and then spending goes up, and then that may give cause for concern for inflation issues. So it's important that we look at how we manage these things to manage inflation. Now, government is looking at recalibrating its inflation basket this year. What it then means is we may potentially have some gains, and then also look at the stability of food inflation. We've seen that food inflation is not dropping, but it's stable. What it then means is if government is able to put some money in the initiative is proposed under the Agri for Transformation project, we would see the production go up and then some stability, and actually seeing a drop in food inflation, which would actually impact overall inflation for the country. So that coordination, emphasizing it again, needs to work for us to ensure that what we are doing is not counterproductive to bring inflation and then exchange rates down.
Yeah, and we know the impact of monetary policy on inflation. And so as the MPC starts their meeting, would you advise a reduction in the policy rate? What do you foresee?
Okay, so what I foresee, and that's it's a very tricky position. I think we are all waiting to see what the MPC will come up with at the end of the day. But then the key thing, like I mentioned, would be that the MPC would also want to look at things in such a way that we don't push the economy into a situation where we would have to now fight fires. So the MPC may be conservative in its projection in terms of bringing monetary policy rates down. From what I see in terms of what the projection is, I think that the MPC will still maintain some stability or some conservativeness in projecting monetary policy rates, and then adopt more of a wait-and-see approach to what the government intends to do.
All right. I mean, we led the bulletin with a story about the IMF's assessment, fourth review that we expect to happen next month. I'm sure one of the key areas you're going to look at is government's fiscal measures. Now, from your analysis of the 2025 budget, you also looked at fiscal sustainability. What are your impressions?
Yes. So what government has put together, I mean, clearly speaks to what the expectations of the IMF is and speaks to our current state as a country. Government fiscal projections, and the government has said is going to introduce some fiscal shock into the economy by not spending so much. And it's all to ensure that we are able to service our debt obligations when they fall due. We are able to meet our recurrent expenditure and then send a good signal to the domestic and international market. So even though we've missed some of the key targets on the fiscal end as well as the macroeconomic end, it's the expectation that government would go to ask for some waivers and maybe a possible extension, even though the government has said that it's not an option they may consider. But then I believe that if government is able to live by the fiscal measures or the fiscal fence is created for itself, we'll be able to see some revival towards meeting the benchmarks and then the indicators set under the program.
Yeah, and there's talk of a potential program extension. What do you advise in that sense?
So yes, government would have to take a critical look at its own projections. Extending a program has its own benefits as well as its disadvantages. In terms of extending the program at this point, government would probably be given some room to be able to implement some of the initiatives it has to be able to see some results. But then government may also want to free itself as soon as possible to be able to have some fiscal room to undertake certain projects. What is key at this point is to gauge the market to say that has the program been able to yield that impact of restoring investor confidence? So for me, I would think that I would want to say the government has to take a critical look at its performance. And then the key objective is to say that has the program been able to achieve the objective of restoring investor confidence in order to make a decision on whether to extend or still work under the current benchmarks and indicators of the program.
Thank you so much for your time. Osei Osu Jr., Senior Manager, Strategy and Operations at KPMG. Appreciate your analysis and insight. We're grateful.
Thank you.
All right, you're watching The Marketplace. And so we've been talking about the IMF. We've been talking about also the Monetary Policy Committee meeting. We just want to bring in this one from the Chief Executive of Stanbic Bank, that is in the person of Kwame Sumening, on what he expects to be the decision that is taken at the end of the Monetary Policy Committee meeting. He expects the rates to come down. Take a listen.
The policy rate, we believe, follows the inflation rate. Inflation has stayed around 23%. The pace of disinflation has been a lot slower over the last few months as compared to how we would have it. And so what market watchers are looking to see is whether the expectations for inflation would have dropped enough for the policymakers to make a move. And we feel that just given some of the sentiment we've seen, the currency has stabilized, and the food drought, while it's still not behind us, we've also gotten some indication that the rate of increase of food prices has
All right, you're watching The Marketplace. We're taking a short break. When we come back, we'll be talking about treasury bills, how government failed to meet its target, and interest rates also, stopping short of its decline. Details coming up. And thanks for staying with us, everyone. For the first time this year, the government has failed to meet its treasury bills target. Auction results from the Bank of Ghana revealed an 18% undersubscription in the sale of short-term instruments. Additionally, the decline in interest rates observed in recent months has come to a halt. Joining me is Head of Trading at Republic Securities, Patrick Edem Agama. Good afternoon to you, Patrick. So why? I mean, what factors contributed to government missing its T-bills target this time? Can you hear me, Patrick? Okay. Patrick is frozen, I'm told. We're going to try and buy some time to get him on the marketplace to discuss this. Plus, our eyes are also on the stock market. Hopefully, we get Patrick back on the marketplace to discuss this. Well, Patrick, if you can hear me, I was just wondering what happened last Friday, why government failed to meet its target.
Good afternoon, Daryl. Yes, so we noticed that on the money market last week, on the secondary market, about 4.5 billion traded in the secondary market. And out of these, about 72% were treasury bill. Again, we saw that liquidity was drying up, and we saw people throwing 4.99 billion Ghana cedis to the government. But the government rejected about 1.6 billion. Although the target was not made, we saw that there was another signal that the government states that they are not just speak about receiving all the money that are coming.
Yeah. So how significant is this 18% undersubscription in terms of investor sentiments and confidence in the treasury market?
Well, it's really significant because the signal that the government has shown by not accepting every money that was thrown at them shows that they are not desperate and they have enough provisions to cover the maturing security. And if investors know this, it gives us all a time to wait for what the MPP committee will decide, and then we can be able to predict interest rate directions.
Okay, so we are waiting for the MPC to make their decision. Hopefully Friday we'll hear a word. But do you anticipate this is a one-off undersubscription we've seen? Do you expect the trend to continue?
Well, for this particular week, we foresee some level of undersubscription again because, again, liquidity is dried up. But if you look at the target, the government is looking at collecting about 5.6 billion. And the maturing obligation is just about 4.8 billion. So even with this undersubscription that we predict, we think government should have enough in their reserves to be able to cover the maturing obligations.
And interest rates decline coming to a halt. I know there were concerns in the previous weeks about the rate of decline. Now, what's changed?
Liquidity can play a greater part of what's changed. Liquidity dried up very fast. We've also seen interventions from the BOG, cautioning the finance ministry about how this can affect the CD. So I believe this is also coming up to play, and the control is being checked so that it doesn't drive CD depreciation to a different level.
Okay, I want us to quickly talk about, we just have a minute, quickly talk about the stock market. Our eyes on MTN, Total, Standard Chartered. We expect them to be the lead gainers this week. What are you watching?
Well, what we are seeing is that there is a lot of demand on for this particular stock, especially Total. For now, we've seen that MTN dropped some pesos already. Car Bank is also expected to drop some pesos this week, and we expect demand to be mounting for banking stocks because we see a lot of financials being published, and they look really good.
All right. Patrick Edem Agama, thank you so much for your analysis on the marketplace. We appreciate your time. And that's our program, everyone. Thanks for watching. There is more news on our website, myjoyonline.com/business. Head there for the day's latest stories. My name is Daryl Kwao. Thanks for watching. We will be back same time tomorrow.